The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the Weekend Podcast. I'm joined by Peter. Oh, that's it, I think. So you've been checking out Peeves. That's Pete and Steve, that Peeve.
Yeah, Peeve.
Steve's Instagram, it's party night. Was it last night with Steve's place?
Well, it looked like it. Yeah, it looked like he was partying like it was 1999.
Oh, hang on a sec. Steve Martin is unavailable. I'm calling him on Skype there. He's unavailable. Oh, hang on, I'm not recording. April Fool. That's crazy, that April Fool. You know what I did yesterday was I swapped making his pants and his sock drawer, so I put all the pants in his sock drawer and all his socks in his pants drawer. She didn't know what was going on. She was literally so confused the entire day, you know. It's April Fool, you know. It's wacky. It's really crazy.
Oh, was she walking around with pants on her feet all day?
Yeah. And also the stock market went up yesterday. April Fool, our stocks did. April Fool. Yeah, it's crazy. Do you know what Monty said to Megan? He said, Mum, I'm going to pull down Dad's trousers and pants and say April Fool. That's not really April Fool, Mont.
That's not really.
No, he doesn't really get it. He's quite neutral, you know. Oh, okay. Yeah. What is it then? It's, that's not it. That's just probably.
Wasn't he struggling with it last year? I can't. April Fool. No. That's not April Fool. Yeah. He still hasn't quite got it.
No, he's still not quite there. Let's look at Steve Martin. What was Steve Martin up to then? Was he on? Hang on. Did you see? What? The picture I've got of Steve, first one, is like a guy with an ear at a conference. Oh, well, with a mask. I've seen that. The guy sitting behind him. It looks like the guy, the picture, has got 3 ears. That's it. It's not like that. Hang on a sec. Go on.
Bingo Lingo.
Oh, Bingo Lingo. Is he? He's with the... Is that when yesterday, last night? That's 4 weeks ago, that was? No, is it?
What? No, it was last night. And he seems to have been at a thing called Bingo Lingo, and then they started to draw on the bingo things with fairly phallic shapes, and then they started drawing on each other. So that's interesting.
What's that, in the stories, or in this... I can't see any of that. Where's that, then?
That's his Insta stories, yeah.
Oh, how do you get that? Let's have a look. Oh, okay.
Come on, Grandad.
Oh, Bingo Lingo, yes, store. Oh, this looks crazy. The Bingo Lingo logos... There's a lot of people doing it. Where is that? In Cardiff, is it? In Cardiff Bay or something?
It's Steve. I mean, he doesn't leave Cardiff, so I'm assuming he's in Cardiff.
We did last week, to be fair. That's like an aircraft hangar, that place, isn't it?
Yeah, I know, yeah. No, I don't know. And unfortunately, we haven't got Steve to ask, so we could only guess.
Yeah, but do you see, though? Do you know? I did notice yesterday, the stocks, right? Bit more liquidity around, isn't it? Have we seen the bottom? Hey, April Fool, Monty again. but I think we've seen a bottom. I think we have. I think the liquidity's coming back in. You know,
it's too soon to say, but it was a nice week, wasn't it?
It's not too soon because the microcaps rally ahead of everything. They are literally. I mean, the microcaps knew there was a bear market. They knew they were very clever. They knew there was a bear market coming, like going back this time last year. Do you remember this time last year I started rolling over? Because I keep a track on my porf. Do you do that? Well, do you update it on quarters or look at it?
Yeah.
Oh, I see.
Yes.
And
We've had this conversation.
Have we?
I do. The others don't really, I don't think, that much.
Okay. So for Q1, my porf was down 14.8%.
Oh, very similar, yeah. Mine was 13 something.
And over the last 12 months, okay, from the 31st of thing, so 12 months to date, 18.7% down. So that's a fifth down in a year. And that's the worst. And it's exactly this time last year, like I said, it started selling off. Yeah. So I think we've seen the worst of it. But if you look back, I was surprised at the end of 2021 because of the cracking first 2 quarters, because it was literally, it's almost like it's happening again. So if you go back to 2020, the dash for cash crash happened at the end of Q1. It's almost like a conspiracy, isn't it? End of Q1, it all sold off massively. The fastest sell-off ever in the history of stock market indices. And then all of a sudden, that year then, with stimulus bond buying and the central banks pumping, printing cash, print, and just buying up stuff, the stock market went nuts and rallied. You could have been in any dog stock from end of Q1 2020 after the crash, and you'd done well. And I did do well first. I said the first two quarters. The rest of the year was fantastic, and then in fact Q1 of 2021 was fantastic, and then it started rolling over. In 2021, and it's been like that for a year. It's been going lower and grinding sideways for a year.
Yeah, my portfolio last year, I think I hit an all-time high in May. So I was I was still holding some gains until then, and then it started to kind of roll over. But in fact,
what I do on my spreadsheet, I don't know if you do this, but I also create a little bar chart of all the quarters, and in fact, I'm looking at the on the bar chart there, and it started rolling over. Well, the peak was the 30th of the 6th, 2021. So that was June. Monthly, and then it started rolling over. Then that was the peak. Yeah. So, but
I thought this week was a good example of why you can't time the market, because why particularly did this week? We had a couple of stocks, and I'm sure we'll talk about them in a sec, that had good weeks and for reasons, but. Otherwise, the general market, it just seemed a bit more bullish and a little bit. And you wouldn't have. Why would you have predicted that this week? Unless I've missed something. Obviously, the Russian situation. Well, that's rumbling on. The cost of living crisis is. Well, we're all aware of that, and that's happening. There was no reason particularly that we should see a bit of a rally this week. And for me, my portfolio certainly did, which was welcome. But again, absolutely, you could not have timed that. You couldn't have gone, right, I'll sell out 3 weeks ago and then buy in just before this rally, because you just don't know when these things are going to happen. So,
you know what
buy and hold.
Yeah, well, the thing is, it's almost like when the markets are the most bearish is when everything's sort of been priced in, So we know these worries. It's the unknown worries that take us from the left field that the ones that really knock the market. But once you know the worries, there's a very famous saying in the stock market: the market climbs a wall of worry. As long as they know what it is, the biggest problem for the markets is uncertainty. When you know what's going on, what's happening, that's the big worrying thing. But we know what the worries are. We know they're inflation, but the central banks are now, they're slowly hiking up the rates to deal with that. And they say they'll top out this year. So the stock market, of course, looks ahead a year, 18 months. They know that. So that we know it's going to get better. Even, war in Ukraine, inflation, all that, oil and gas, it's inflation pretty much. Even the yield curve. Have you ever heard of the yield curve?
I've heard of it.
Yeah. So it's a very famous recession predictor. And so you've got bond yields, government bonds in America. Yeah. You have different lengths of them. So you can get a 10-year bond and they pay you sort of 2.5% for that. Or you get a 2-year bond, they pay you 2% for that. Or a 30-year bond and they pay you 3% for that. They'll give you. And it should be the longer the bond, the bigger the yield, because it's more risk carrying, holding their money for longer term. Now, if the shorter end yields, like 2-year, start paying more than, say, a 10-year, it's a 10-year they compare. That's the classic one. If the yield on the 2-year rises above the 10-year, they say, recession. And it's been a very good predictor. So I predicted, I don't know, of the last 10 recessions, I think it's predicted sort of 8 of them, if that happens. Yeah. And so that happened on Wednesday. And so, here we go. But the Fed have also been messing around with bonds, So people saying, is this a true indication? Because the Fed have been buying short... The Fed, yeah. The Fed at the Fed. Yeah, no, Fred at the Fed.
Right, yeah.
Head Fed, Fred.
Right.
Or it's Jed, isn't it? No, it's Jerome. So if they've been buying, nearer term yields, bonds, which is keeping down, which means people have been putting their money in the stock market instead. So they've stopped, reducing their bond buying program, or have they? I don't know. But so that flashed. But the thing is, it's not a short-term indicator. When that happens, generally, the medium or average time till the stock market rolls over and has a recession is 18 months. And not only that, since that, when it happens, there's a big rally. So apparently, the S&P 500 generally rallies on average 19% in those 18 months, from the inversion to the actual recession, 18 months. But also, the market looks ahead and pretty much prices in the recession anyway, and that's what's been happening. So the real economy, and you tend to find markets rally on recessions because it's priced in already, done. You know, and micro caps especially, they tend to, like, if you go back to the great financial crash, they started selling off 2007 pretty much, but the big caps didn't roll over a year later, and so we've had it. The micro caps, we've done it. We've experienced the bear market. I think we're there, done and dusted, and now
let's hope so. Yeah. One thing, I mean, this time of year, it's kind of ISA season as well. Sometimes it has a little bit of an impact with people topping up before the deadline and then adding to the new ISA allowance.
ISIS season?
ISA season.
What are they
no,
do
ISIS.
No,
don't worry about them. Oh. No, they're not interested. Well, they probably are interested, but they're not involved. I don't think they're big private investors. But I just wondered if
they certainly acquire assets, don't they? They certainly acquire assets with guns and stuff, you know. Right. Pardon? That's my oil field now. Okay. Yes, we will be selling that off. Come on.
Okay. I just wondered if we'll see that this year with the ISAs because of like the cost of living, and will people be will they have as much disposable income to actually start investing? I don't know, but
it's almost like you've predicted what I was going to say. In fact, you I would have forgotten about this, Pete, but you've cued me up to something a poll I did on Twitter.
Right.
Excellent. I said this time next week you're allowed to add a maximum of 20k cash to your investment ISA. The 2022-23 financial year. How much will you add? And I gave him 4 options. None was one of the options. Less than 5k was another option. Between 6 and 10k was another option. Or more than 10k. And what do you think the winner was?
As in what you'll add in next week? Like
maximum 20 for the financial year. I said, how much were you adding? So
for the whole year?
Yeah. Who was the winner?
The average is going to be in the middle, isn't it? It's going to be around 10k. What was that option?
6 and 10k. 6 and 10.
Yeah, that one.
No, the average is more than 10k. Yeah. I'm chucking some cash in there.
That's good.
I'm chucking some cash in there, big time, fella. Yes.
Good.
Yes.
How many people responded? 3.
No. So 357 votes, and 38.7% said more than 10k. In fact, the one you picked was the lowest, actually, Pete.
Interesting.
So 6.
Well done, Pete. Really good.
Yeah, 6.7%. Less than 5k, 17.6%. But second place was none. The stock market is rubbish. I don't put any in it.
Well, there you go. What was the percentage of those?
37%.
They're virtually the same as the.
Yeah. I think some are so annoyed with the market. I don't put any into it.
Well,
the market's so annoying. It's really getting on my nerves.
Well, no, but I think also the cost of living, people are going to go, hold on to a bit of a war chest, not invest it in the stock exchange. Obviously, you can put it in an ISA and not invest it, but...
where do you get these war chests from? I don't know. I haven't got one.
Warchest.com.
Oh, okay. All right.
Yeah, there's a whole range.
Nice. I need to get one of those. And what do you do with it?
Just get ready for war.
Okay, but we've had it, haven't we? Oh, okay.
Oh no, not yet.
Right. Okay. In fact, they're knackered in Russia. It's funny that this week, did you see that they've been lying to Putin, all his people. Vladimir Vladimirovich was doing very well. Yes, very well. And almost taken over. Yes, so easy. Now we're going to pull back a bit because give the guys a break, or a victory lap and all that.
Give the guys a break.
Yeah. And
give the chaps a rest over the weekend.
Just Vladimir, just watch state TV. You see how well we're doing, and he's believing his own propaganda. It's like, no, that's for the masses, you fool. What's the real story? No, it's all going well. Don't worry. Don't look at the real media. Yeah. It's like
they're out there filming like YouTube videos.
Yeah.
Fake YouTube videos. This is it. This is us taking control of this town.
Yeah, they dress up one of their own guys in a Ukrainian uniform with it and hold him down on the ground. See, another Ukrainian. We got him. Don't stay there, Vladimir.
Another one, Vlad.
Yeah. And it's going very well. But don't look at the media, the social media. We banned that. No. Yeah. But so the war's happening, yes. And basically, at the most bearish is the best time to invest, when everyone's so bearish and you see no way out. Literally, it's dark, it's doomy, it's gloomy. You're thinking, oh my God, I'm going to wake up Monday, it's another sell-off. Everything's going to sell off. I'm just going to sell my stocks. Anymore. When you're like that, that's the best time to buy. If you've got a war chest, which you have, that's the time to sort of unlock that war chest, get your bombs out, or your cash, whatever.
Cash, yeah.
And invest in growing a reasonably valued company. So this is the thing. When you think about it, right? I did a thing on I think it's a bit complicated, really. I'll redo it for the webinar, for the Share Club. But, buying on value and selling on value. People often say, you often talk about when to buy and what to buy your stocks, and you point out why you bought something. But you never say when to sell. And that's very good, actually. And it's got to be based on value, not just on, you can do a profit, I suppose, but of the share price, but you look at value of a company. If you're buying a company, the thing you should buy is like a reasonably priced company, which is an asset pretty much, that you hope will appreciate in value. That's all you can do. And then you hold on to it. Of course, the market may be volatile and may take it down, but if you've bought it at the right valuation, it shouldn't take it down that far unless they need cash or something, which can knock it. We know that, and we've seen that with Gfinity. But now, for example, in fact, Gfinity is a good example. If they're going to be making profit in 2023, that means they are an appreciating asset. That means they're generating cash. That cash level will go up. What do they do that? Either reinvest it in the business and create more value with that reinvestment, so making the assets even bigger, or if you're a mature company, you pay those profits out in dividends. So it's an appreciating asset, especially in an environment where inflation is going up. Stocks are good, especially if they're profitable. They're generally, perennial loss makers. They're not. So they're destroying that value. But that's it. Buy appreciating assets. That's what it's about. In fact, I asked my sons. I did a podcast in the week with my sons on free trade. We got a free trade app, very good actually, and. I'm trying to. I want to get to the stage where, because I've noticed that if your parents have a passion for something and you share it with the kids at an early age, they tend to get quite good at it. It's like if you look at any musicians or any sports people who've done well, and their sons or start or take it up, they tend to do well as well. So you've got to have a passion to share with your kids, I think, and I do. So I share with a friend of Monty. I did say, what's an asset? Is it something you own or owe? What's a liability? Something you own or owe? And slowly every week I'm getting to that sort of, introduce terminology. But this week we went through the stocks, and Fred's Costco is doing very well. Fred's Costco is up like 25%, which is a big company. And they're only on... Yeah. They're only doing American stocks at the moment because they know them, like Disney and McDonald's and all that stuff. But what else? Right. Amazon's up, Apple's up. They do all that. I think Monty's Snapchat dropped like 50%. Something because I think Facebook is changing its advertising algorithms or something, or I don't know what it was. Or no, Apple or something like that was. Yeah, Apple was changing the security. But So when you're buying stocks, all you can do really, isn't it, is look at the valuation, try and buy a good value, and then hopefully that valuation or the asset appreciation will happen. And in an environment where cost of living is going up, and your purchasing power is going down, you need to have assets that are appreciating. Like a house, for example, That's why the poor get poorer. It's very sad because people who can't afford a house tend to get squeezed by rent and all that stuff, and then they get poorer, So, they don't have any assets.
Yeah. Fred and Monty's portfolio is outperforming us, or...?
They have for the last,
right.
Because, apart from a couple of Snapchat, but because they've... They're big American companies, and they've taken a bit of a dip. In fact, Disney, this week I said, right, buy, sell or hold. So I went through their stocks, they got 5 each. And I said, you can... And we sold, in the week, Megan sold a dog crate, which we don't want to put load in a dog crate. I never really used it. And so got 40 quid for it. And so I give them £20 each. They got each their stocks for 20 quid. I said, right, 20 quid here, okay. You're going to buy some more of the stocks, some more of the stocks you hold. You're going to sell one. Or you do nothing, basically hold, buy or sell. And I think Fred topped up on his best performer, Costco. So why not? I said, I have no idea. I said, why do you think Costco's doing well? He said, because they sell lots of stuff, good stuff. He said, no, Monty said they sell big pizzas.
Excellent.
I said, well, that may be it, yeah, but I said, isn't like Costco good for staples? And it's something, somewhere you go, regardless of inflation. The people have to buy there. They're not luxury items so much. Costco, are they? So I said, probably yes. And Netflix.
We don't use staples, they said.
Yeah, and Netflix is taking a bit of a hit. And Fred went, what? I was watching that yesterday.
Excellent.
I said, right. Yeah. You need to watch some more, Fred.
I haven't listened to this episode, obviously, but I did enjoy the other ones you did. Their views of the world are good, aren't they? It's very kind of very localised, isn't it? So
so he also Fred
very
was
Nike trainers now.
Fred sold Nike. I said, why? He said, people are getting. He said, people are getting lazy. They're not going out and stuff. And I said, really? Is that a personal reflection, Fred?
Exactly.
Yeah, I think it is, because we've been telling him, stop being lazy. You got to get up and do something.
So just like everyone's lazy now, so I'm going to sell Nike.
Yeah. So the thing is, stocks tend to outperform generally, but in an inflationary market, where else are you going to put your cash? The bonds are not paying off. Fixed rate is not going to pay. Because if you look at inflation, at like what? I mean, they're going to say close to 10%, but I mean, if you're having a 2% coupon on a bond, what's the point of that? I suppose better than losing money, but if you're holding the stock market for a long time, it's still 8% down on your money, really. There's no point,
But I think that was something about the whole, war chest or keeping your powder dry, like not investing because of the volatility of the stock market. Some people will just go, well, hold on to cash. I know it's a depreciating asset, but at least you've got the cash for these, the nasty surprises that might be around the corner with the hikes in energy prices and it being winter in the middle of April. That's useful, isn't it? So
that was very odd, wasn't it?
Not the middle of April, start of April, sorry.
Yeah, last week, though, literally, we were in sunglasses as we walked to the pub. And yet this week, a big coat's on. I went to pick up Monty at his school disco, end of term disco.
Nice.
The kids, the parents will pick the little kids up there. And there's snow coming down. We're wearing coats. We're genuinely cold. So what the heck is going on here? It's freezing. Very odd, isn't it?
Strange.
But no, April and this month tends to be a decent month, April, because like so you've got liquidity coming in. People, ISAs, especially private investors, top of their ISA, getting ready, freeing a bit of cash up. Maybe pulling the trigger now too early, thinking, I got to wait for ISA. No, I can't. I got to buy it now. So maybe you get that because, and of course, ISA's pretty much. I think they're more private investors that obviously do that. So they're maybe I don't know. I have no idea. But generally, good month. I think we've seen it. Seen the worst of it. I'm going to sneeze all the time.
Okay, excellent. Let's do that live.
Yeah. So let's look at some individual stock news, shall we now? Individual stock news. Could do with a jingle.
Oh, I didn't realise you had a jingle.
No, Steve did it last week.
Oh, that's a really good jingle.
No. There's a different version here. Look, individual stock news.
Oh, I like the first one. Can you play the first one again?
Individual stock news.
Any others?
Yeah,
have you got like a Mexican one?
Yeah. Individual stock news. That's more of a rock one,
Oh, that's cool. That's pretty decent.
And there's a Western one as well, a regular one. Individual stock news.
I think that needs work.
Does it? I'll tell Steve about that one. Yeah, Steve. Yeah, Steve, where are you? We need you.
All right. Have you got like a Baroque version?
No, I didn't know. Steve didn't know what that is.
Oh, okay.
I did ask him for that. He said, I don't know what that is. And he thought it was like one of those things you take, that gives you vitamin C. Right. I said, that's Barocca.
Yeah. No, Steve, no. What about jazz?
Yeah, there's Jasmine.
Have you got that there?
Individual stock news. Oh, yeah.
Okay. Again, that probably needs a little bit of work.
Yeah, okay.
What about hip hop?
No, he didn't do that. Let's just talk about the stock news, shall we? Rather than just do the jingles. Because we're in danger of running out of time. Just talking about the jingle about individual stock news.
That's all we've got time for this week.
Yeah. Only had time for the actual jingle, not the news itself. In
the production meeting afterwards, guys, about the theme with the jingle.
Yeah. Can you not talk about the jingle stuff on air? Yeah. Okay. More do the content on air. We talk about the jingles off air.
Okay.
Oh, okay. I think you talk about the jingles on air. No, not talk about the jingles on air. Oh, right. I missed the not. Okay, sorry.
Right.
Yeah. So
what are we talking about?
Yeah. It's been ages since Polarean put anything out, wasn't it? God.
That was a breath of fresh air, wasn't it? I mean, their approach to publicity is interesting, should we say?
Non-existent. No.
Non-existent, but there we are.
When was the last time we had new system orders in February? But going back, sort of
Brown Wednesday was what, October, wasn't it?
Directed dealing.
So it's not.
Yeah, it was
It's
October
nigh
the
on-
6th. October the 6th, so literally, what is
Everyone
that?
remembers.
6 months of it.
That's 6 months, yeah. 6 months with like very little news. So well done to everyone that's held on,
Yeah.
me included.
And and what it was, basically, they just resubmitted the
I know.
application. But no, I think what this signifies, like I say, it's a bit of paperwork that's gone in. It's filing follows the resubmission of the resubmission of this new drug application, NDA, to the FDA. That's POLX, MRI, CRL. That's a complete response letter. But so what I think what it signifies, though, rather than a bit of paperwork being done, I think is that they're probably very confident, having now met with the FDA, of all the topics they knocked them back on, and they're addressing that. So hopefully now it'll be old what's the guy at the FDA? I forgot his name.
Jeff.
Chuck and Jeff, yeah. Hey, Jeff, Chuck. I see we got a letter from Polarean. Oh, good. What did you say? Well, all those things we said that we didn't like last time, they seem to have covered that. Yeah, they pretty much covered it. What didn't we like? Oh, they missed their full stop off the end of a sentence, and they didn't capitalize one of the letters. It should have been capitalized, Should have a big letter, not a small letter. So they've covered that, yeah. So and that's what... I think essentially there's been talked to Vadim Alexander, who's head of healthcare at SP Angel, and he said there's been a lot of complete response letters during the COVID period. And he said, and it sort of tallies with what Richard from Polarean said, they're so overworked. Jeff, where's the next one? I've lost it. Where's the application? Paperwork everywhere in the office. There's chaos, Oh my God, just reject it. And because if any queries on any applications, they literally haven't got time to go to and forth with the company. So can we just tidy this bit up? Can you put a bit of Tipex on that, whatever? They can't bother that. So just say rejection. Where's the rejection stamp? Rejection. Right. I can't find the accepted stamp. Oh, you just use the rejected one. Rejected.
That'll do. Just get it out.
Just get out there. Don't mind. They'll come back in 6 months. Don't worry. Yeah. That's the way I look at it. If they got anything worth selling, they'll come back. That's what I'm saying.
Maybe it's the opposite. Maybe they haven't got enough work. They're like, well, we better keep rejecting these because then we can keep. They have to resubmit, and we have to do the whole thing again, so we keep in work. Well, that's a good idea, Jeff. Yeah. Maybe.
So I know. Well, I just see this now. They're quite confident. They're taking the time, which is good. It's not like they resubmit it straight after. So,
no.
Come on, give us another go. Have a look at it.
But I don't know, what I'd like to understand is like what percentage of the overall application, if you like, was questioned.
Very small.
And very small, exactly. So it's a few percent of the whole overall thing that just needs to be clarified, confirmed. And I know in the RNS it said it could take 6 months. Now, another 6 months. But you kind of go, oh, come on, really? How many things is it? Come on, they can manufacture it now. We can do it. Everything else looks great. Come on. I know I'm talking as a private investor. But, it's just, it would be lovely to kind of get it through over the line in the near future rather than 6 months. But
I think it could be. I think they're trying to be conservative here. They don't want to, I said, they don't want to... raise people's hopes and expectations too much. It's currently expected the FDA review will take review period will take 6 months. The company is making full use of this time, full use of it. They're not going to sleep or anything. With regards to commercialization and launch preparation, and will further update the market once material information is received. And then Rich said, we have resubmitted the NDA for our 129 xenon drug device combination product, following extensive discussions with the FDA. Extensive. See? So they've been extensively discussing stuff with them. But everything. Just the weather, sport.
Yes.
And this. Regarding issues that were raised in the CRL, the entire Polarean team has worked diligently. I bet there's one or two,
Yeah, I don't know about the entire team.
Yeah, there's one or two that swing the lead a bit sometimes, maybe. I think Rich has been kind. There's always a lazy one, isn't there? Somewhere.
Bound to be.
The entire Polarean team, it's like Colin again. Who's Colin?
Yeah.
Don't know. His break, is it? He's not come back from his break.
Yeah, exactly. Right.
On the toilet with the newspaper for an hour and a half,
Yeah.
Colin, you in there? Colin, you have a bit bad tummy. But to me,
We've got to get this thing to the FDA. Come on.
Come on, we're working diligently here, Colin. Hang on, my stomach coming out. What's that? You got a newspaper in there? No. It's just in case I'd be sick. Okay.
Yeah. Is that a YouTube video I can hear?
Yeah. To ensure, in fact, that's more up to date, isn't it? Really, phones rather than newspapers these days. Yeah. Is that TikTok? You watching? Yeah. No, I don't know where that's coming from. Colin, come on.
Is that an entire Netflix box set you're watching?
Yeah. In fact, the entire Polarean team, apart from Colin, has worked diligently to ensure that all the points raised in the beginning of the blind brackets, apart from Colin.
Brackets apart from Colin.
To ensure that all the points raised in the CRL were comprehensively addressed. So all the points, that's plural. But Richard, when I spoke to Richard, he obviously can't say a lot, but he said it's literally just almost stuff that could be done easily. It's a box ticking exercise that just to be checked. It's the data they've got. It's not manufacturing issues. It's just it's admin issues essentially. So
I was very pleasantly surprised by the rise this week based on that news because I thought it could go either way. Yeah, absolutely. Thanks very much. Yeah. Because it could go either way, and really, if you think about it, that news.
No, I said I no doubt it would go.
Wait,
no doubt.
No, but here's my thinking. Like that news doesn't really mean anything, does it? It means they've just resubmitted. Yeah, okay, that's good.
No, but we just said this. I think it signifies they've covered all the issues now, and they've resubmitted. Confident. They've worked diligently to cover all issues, so they've resubmitted it. They're confident they've covered all the points that given the knockback last time, and now. And when you think about it.
Yeah, but they can be as confident as they like, but it's the FDA that have to be confident. So
but I assume it's been in discussions here. It's
a done deal. I'd like to think, but that's what we thought.
What's the process you call when you're going back and forth with each other and talking? It's
due diligence.
Well, that's but it's not just should we submit this and see what they think? I think they've been. It's a discussive sort of process where you say, okay, so you want this? Right, we'll do that. Is that okay? Yes. And next point, this. So it's back and forth. And and then they say, okay, I think we're ready to go. Yep, you're ready to go. Okay, let's submit. And so I think...
But that was the case last time, wasn't it? But wasn't it? They're back and forth and they were,
but the last the last 2 weeks, they do an end of review, pre-submission check. And the FDA apparently said to them, no, we don't need to do it. Assuming everything's okay. Submit. They go knocked back. What? You see, you're in an end of review meeting.
Yeah. So have they done that this time?
I don't know. No, I don't know. But no, I said this.
Exactly.
In fact,
anyway, look, it's great to have a rise. I was just...
my nephew Henry held strong. He said, I'm back in profit. After holding strong, not doing anything, I'm back in profit now. I said to... He kept asking me, in fact, day before, he said, should I sell Polarean? Because we're doing nothing, wasn't it? I said, listen, it's only a matter of time. The closer we get to it, the less time it's going to be, because they've got a time limit on this, like 6 months or whatever. So they had to submit it, I think, within 6 months. So near the knuckle, close to the wire. But and the next day, I said to them, listen, they come up with any news, it's going to be better than the CRL news. Because it's coming from Polarean, it's not coming from the FDA. So any news they release now will be coming from Polarean, which will be positive. And the share price will rise. And I did say on Discord, I said, I think what's that? It'd be a double-digit rise on that news before the market opened, and it ended up like 25% up, I think. So, nice.
Yep. So that's good, and let's just hope it all goes through this time and it pushes on up, because then that's hope. Yeah, well, that's the dream, isn't it? That it actually gets approved and moves into production, and we get them everywhere, these machines. So, yes, let's see. Fingers crossed.
Other news from G-Tech. They're expanding their platform for the energy transition. Are you ready for the energy transition? Have you turned your heating off? Last night we were in the house watching telly, right? It's like up at 7. It was freezing. What's going on here? Why is it so cold in the house? Making the switch the heating off.
Perfect.
Because yesterday was the day, wasn't it? All the bills started rising. Switch the heating off. It's literally freezing in here. Well, upstairs, the kids' rooms, they were freezing as well. So the heating's gone up. I said, well, you can put the heating on a little bit. Just take the ice off the windows. Come on.
Yeah, exactly. Yeah.
But
my hands are too cold to even turn the heating back on.
Yeah. Are you adjusting your heating settings? or just wearing extra jumper?
Well, I had the other week because it warmed up, so kind of reduced it all anyway because I thought it doesn't need to be on as much.
I think people would be more efficient with it, though. Whereas before, people would whack it up to 21, 22 degrees, 23 degrees. You don't need that. That's almost subtropical. So, we never put ours up like ours. Maximum we get ours on sometimes if it's really cold, 21. I don't know about that. And then normally it's 20 and a half, or normally, but last night we sneaked up to 19 and a half. So even now, it's almost like saying, okay, let's be a bit more efficient. If you just knock it down by 1 degree, it'll help. Everyone did that. It'll help. It'll,
yeah.
Do you know what? In fact, let me just go through the GTEC, but I've got a solution, I think.
Okay, good.
But there you go. There's stuff. There's web-based stuff. There's cloud-based data analytics, and they can help companies find subsurface elements like copper or magnetic sort of stuff. So these energy companies, in fact, will be looking for critical metals that go into batteries and all this. They can help them with all this because they've got all this kind of software and they're detecting stuff that does that. But also in the hydrogen hubs, that's the fast growing bit. What I like though is they are across both sides of the energy spectrum for companies. They're traditionally their software is used by petrochemical companies exploring for oil and gas, and when you see these really odd heat maps or magnetic maps, you think, what the heck is that? That's their software that's being used, by these companies to detect assets and all that. So that's what they're doing. So they've expanded this software. So they can still be doing that, but also they're onto the renewable side as well, the hydrogen side. And so that's not going to be generating any revenue for this year. Probably next year starts. I think final investment decisions on a couple of those projects are happening this year, which may give a bump up to the share price. I think there's been a seller in there because it's been drifting, a lot. And then, it's good news and they've got plenty of cash. And it's not overvalued, right? But then it's been drifting. All of a sudden you get news, it pops up, and then someone sells into it. So if that seller dries up, I think it'll rise nicely on further news. So it's annoying that.
Yeah.
But yes, do you know what I was thinking, right, the other day? I was thinking...
No.
There's everyone saying, Labour, we need a windfall tax. We need a windfall... In fact, I saw a picture of Keir Starmer outside, meeting during lockdown. I think it was during lockdown. With some, I think, what's that women's group? Or it was in the middle of nowhere, on the mall somewhere. It's like a bench, park bench. And he's sitting down. They're all sitting like 5 yards apart from each other with these visors on, And he had legs crossed, listening to these ladies talk. Obviously a photo shoot opportunity. And you look back now in the context of that, you're in the middle of, fresh air on somewhere in the countryside, and you've got these visors on. Are you insane? You don't want to catch COVID. You're like 5 yards away from each other, and you've got these plastic visors on your face. You don't need that. Some of the stuff now. Do you remember Asda wouldn't let people buy books in Wales because non-essential? They were taping off these areas. You think that now is so absurd. Looking back at that, isn't it? Thinking we are idiots. And do you know there's
the book thing was more to do because bookshops couldn't be open, so it's not fair for supermarkets to be selling them as well, isn't it?
And it sounds insane. I know, but it's insane. Let people buy books, for heaven's sake. It's not to kill people. It's not, Let bookshops open. So what? I mean, do you know there's more COVID cases now than there ever was?
Oh no, of course, but that's good, isn't it? And that's the way that viruses work.
But it's like saying, and this person on the BBC was saying, there's now more COVID cases than way before. And I think, but it's the same with colds,
Exactly.
We're not tracking that. It's just tracking imagine the fear that was put out there about this, to get people...
But I think the sad thing is some people are still really fearful. And you're like, wow, I know. It's okay now, come on,
I saw people outside. I saw people outside wearing masks. I think, you're outside, you fool. It's a lot of fresh air outside. You're not snocking anyone strange. Just walking your dog. Take it on, you fool. Anyway.
Right. What's the point of the story?
I know the Labour are calling for a windfall tax on energy companies.
Right.
Which sounds good. But it sounds like, BP they did say, we're making so much money. We're a cash machine. I think, where's these PR people there? But anyway, keep it quiet. Shh. Making lots of cash while poor people are suffering. But no. I understand the thought of that. A windfall tax on oil and gas companies, so they're making so much money. It seems like an easy win, a fast, easy win. But it's not that simple, is it? Because the year before, they lost money. Are we going to give them? Are we going to hand them money then if they lose money and give it back?
Exactly. Yeah.
And also, there's not old pensioners. Their stock, their money's invested. Pension funds invest in these big oil and gas companies as well, because they pay a dividend. So if you tax the shareholders, essentially what you're going to do is you're taxing old people, and the share price will go down, the pensions won't pay out. Secondly, there won't be enough money to invest in renewables anyway, which they are doing. They're investing more in renewables because of this. And at the moment, have you seen now there's going to be a new round of licenses, oil and gas licenses, to help us with this energy transition. First of all, there's a shut it all off, and you can't do that. It's going to take years to transition from oil and gas, fossil fuels to renewables. So they're now, they can afford to sort of explore a bit more because they've made money. So they've got to make money. So it doesn't help. But I think I have a solution here, Pete.
Oh, I thought you might.
Yeah.
Right, what is it?
This may be controversial.
You're not going to tell us.
Maybe controversial.
Right.
No, I put it to the government.
Right.
But if you think about it, right, energy, water, all it's not probably not a new situation, not a new issue here, but these are essentials that people should have, and they shouldn't be at the point where people can't afford them. We need them. They are essentials. Heating your house, cooking food, all that stuff, electricity, water is essential. Heating your water to have a shower, it's essential. So they shouldn't be out of people's grasps. People should be able to afford them, and they should be kept at an affordable level. So this is my thought here. Governments, yes, the government should be a major shareholder on every one of these companies' boards. They should be a significant shareholder, And this does two things.
That's nationalisation. That is.
No, not a majority shareholder, a significant holder, a seat at the board. This way, two things would happen here. Not only will they keep a check on bonuses and all that stuff, you have to be done properly because some bent government ministers receiving bonuses and keeping quiet about bonuses. But all that efficiency, make sure the companies are running efficiently, they are economically friendly, their policies go in the right direction. There's always a seat on the board for the government official. And secondly, this is the important bit, they would be paid a big dividend.
Yeah.
Now,
that is part nationalisation, is what you're talking about.
No, it's not. But it's not. You're not nationalising.
You are giving money back to the people.
No, if you're a significant shareholder, right? I mean, a shareholder base is essential to any small cap company, any company. Yeah. They want a good shareholder base because they want to do things. They can just tap up their shareholders and say, let's raise some money for this. You need a good, steady shareholder base, right? So they go to the government and say, look at this. If the government, got billions in, they would, if you had like 10% of share or 10% of, I'm talking 10%, not like 20, 30%. If they had 10% of these companies, they'd be earning a lot of dividends. Now, when the oil and gas prices are low, it's fine. They just stockpile the dividends, reinvest them to get more dividends. Yep. Now, when the prices of the energy companies go up, they can use that cash. They'll take the dividends in cash, and they can per cap or pay people who can't afford it, money. So we take the money off. That will pay for the payment, the emergency payments, So that's perfect, isn't it? Perfect.
Yeah. Well,
perfect.
That's essentially
perfect, Pete.
Yeah, that's it. The bailout of the banks back in the banking crisis, they became part nationalised, didn't they? Lloyds and whatever. The bailout then, that same principle, isn't it? So. Yes, I can see it working. So
they'd be a stakeholder, essentially.
It's a
all the biggest companies in the country, the government. I'm not talking about a level where they are. Like, if you go to 20%, you have to make it off of the government. But 10% would give them dividends. It'd give them a say in these essential. And banking is the same essential service. Make sure these people are not profiteering at the expense of people, everyday people who can't afford, or low incomes, whatever. That need these services. They are an essential service. Which, in France, they've only been allowed to raise their prices by 4%. 4%. Yeah. Ours have just gone up by 54%. 54.
Are you saying that these companies are made to give 10% to the government?
No. So the government would be an investor, and that's it.
Okay.
That would be money. Yeah.
The money that they
scale in. They scale in,
they scale in, of course. They'll probably listen to this podcast.
So they take, so Boris be with the with Rishi there, and he said, Boris said, stock market, Rishi, bit of sell off. Yes, Prime Minister. Yes, and I'm going to buy the dip. I'm going to buy the dip. Yes.
Right.
So Rishi buys the dip. And
I just gets money from like just that massive pool of money they have.
So just look at Rishi.
Just add it to the national debt.
Rishi and Boris be looking at the laptop, looking at the charts. You can see a picture of them, a PR picture of them, hunched over a laptop, pointing at the chart, and say, "Buy the dip, buy the dip, buy Rishi, buy the dip." Boris calling Rishi up everybody. Hey, Rishi, buy the dip, buy the dip. All right, Boris. Who was that? His billionaire father-in-law. That's Boris telling me to buy the dip.
I'm not on Harry and Larry. I'm just doing Harry and Larry. Look at our portfolio.
I'm saying is, in France, I mean, they are a bit more nationalistic over there, of course, a bit more left-wing. But I'm just saying, I'm not talking about everything. I'm talking about these essential services.
Yes.
They've got to take it. They've got to be a serious stakeholder in them. I mean, it's still free market as long as they're not doing. But that way, they would earn money. They would earn money, and we are. If you're showing you are, I say any kind of thing like that. They should have government funds. Governments should be invested. I mean, that's the way it should be, especially in smaller, sort of cutting-edge stocks as well. Yeah. There should be government funds to invest in these. To encourage
the energy companies should never have been privatised, but that's a whole other thing.
Well, I mean, to a certain extent, you can't, with like BP and Shell and all that, they are global multinationals, so they've got places everywhere.
No,
so,
of course. But the utility companies, it's just nonsense, isn't it? The way that was planned and thought out.
That's why they should. That's why the government should be major stakeholders, because when they can put pressure on them, they can say, listen, listen, we have a seat at the board. And you're not doing that. You're not paying him. Your bonuses are literally capped to this amount. It's got, you have to be this efficient. You can't, and anything like, even putting, pumping sewage into streams, all that stuff. Hopefully that wouldn't happen in that situation, because they're and you'd say your government, you're on the board of this company. Why is this happening? It'd be more pressure on these companies
because we only own 10%. No one's listening to us.
Buy a dip. Buy a dip.
Yeah, right. Well, I know. Yes, I don't know if it's about the solution, but it's an interesting thing that I'm not in a position to really probably understand whether that could work or not. But it could do.
Anyway,
what's your next step with that? Are you going to email Boris or
Boris? Boris, buy the bloody dip for heaven's sake.
Yeah.
Because there will be time.
Season. Start an ISA.
There will be time. These all companies got to be careful here, because we know the price of oil is spiked. Just look at the portfolios. Look at that. 1, 2, 3, 4, 5 stocks up, 1 flat, 1 down. That hasn't happened for a while. Honestly, it's normally the way around. 5 down, and 1 flat, maybe 1 up, if that, for the last 12 months. So that's a good sign that. It's happened a couple of times recently. We've seen a bit more green across the portfolio. But anyway, commodities. If you look at Brent crude, it's now down to $103 per barrel. But it did peak up at 140. The oil producers know this is the time to really make cash. And I've talked to a couple of companies, all CEOs, small producers, and they are pumping as fast as they can. And this will happen. And now, once the supply, and then you see a relaxation in Ukraine, the oil price will fall very quickly. So if you are making money, I see a couple of people on Twitter who've made money in the Q1 and they're holding oil and gas stocks. And I'm thinking, well, you've got to be careful there. If you're overexposed to oil and gas stock, it may drop off a cliff, especially if they're not like a big, and I'm not talking about the big boys, because they are widespread across gas, oil, renewables as well now. But I'm talking about, and they're checking out lots of oil anyway. I'm talking about small companies that have sort of, one or couple of producing wells. They will take a massive knock. So I would say now, when the oil, in fact, I was talking about this Russ Mould a long time back. We were saying, where would you be now? And I said, do you know what? I'm not into oil and gas. And this is like a year ago when they were at their lows. But oil and gas is the play. It's the play to be. And energy outperformed pretty much any sector since 2020. And now what you get after outperformance is generally underperformance, So you've got to be careful if you are in oil and gas stocks. It's too late to get on board now. It really is too late. You've missed the boat. You've missed the, what's oil related? You've missed the
oil tanker?
You missed the oil tanker, yes. You missed it.
Right.
It pulled out slowly for a year. And now it's turning around, and it's coming back into port. I think that's
okay. Right.
So you've jumped on it, hoping to sail away far away, and it's coming back into port. They go, oh. So, and so what does that mean? We took my rotation on with Paul Hill. I said, I think now growth stock's going to be back in favour very soon. As soon as you see the peak of this inflation, and of course, what's the biggest driver of inflation? Energy. If you look at the chart of Brent crude, it's rolling over. It's had 2 double tops. It was up to 140, now it's under 103. Once that starts coming down, that feeds through into all companies. Because all companies need energy. That's the baseline. So once that comes down, growth stock's going to rally. And they start to rally. I think this is happening. This is really happening now. So it's funny anyway, people are the most bearish. That's the time to buy, not sell. But a lot of people are selling then. No! I said in the weekend podcast last week, it's a bear market. You're selling at the worst time. Worst. Well done. Congratulations. You picked the worst time to sell. Yeah. Isn't it amazing how, like I said, the old stock market adage, we say buy low, sell high, but emotion can make you mess that up. It seems quite simple. Buy low, sell high. That's what's hard about that. Well, you get involved, you put some money in a game, okay, and the market will mess with your emotions to the point where you're doing the opposite. The very opposite of what you should be doing. Am I? Yes. When I went to this investing a year ago, I understood what I had to do. Now I'm doing the very opposite. So thinking, and it does that to you. You do the very opposite. How did that happen in a year? I can't believe it. I went to the market, buy low, sell high, and now I'm selling low, buying high. So people are jumping out of small caps and buying all companies at highs. No.
Yes.
Yeah.
And I think I said the other week on the podcast, like the whole pandemic thing and dash for cash and that whole thing, it felt like it was being, replicated now with the whole Ukrainian crisis, all that stuff going on. I suppose compounded with the energy crisis too. And you sort of think, just hold on, just weather the storm. Yeah, 18 months, 24 months, who knows? But hopefully, we'll be back at all times again, and then waiting for the next big thing that will hit. But it is the name of the game, and unfortunately, a lot of people do get that wrong and panic and sell at the wrong time. Yeah,
just a couple of things I did. It's funny on Fridays, XPF, XP Factory. They are having some rallies.
What do they do?
What they do is that they've got, in fact, I counted it up, right? They now have 40 escape rooms across the world. That's franchisees and owned. And also, if you see...
Remember that escape hunt that you used to be all about? What happened to them?
Yeah, that's it. Yeah. They changed
name. Is it? Oh, right. Yeah. Oh, I didn't know that.
They acquired... about them. Oh, listen to this concept. They acquired a company called Boom Battle Bar, right?
Oh, okay.
And that's what it's called competitive socialising. So basically, rather than just go into a pub, sit down, drink and argue, rather than just do that and then end up in a fight with your friends.
What's wrong with that?
Never a fallout for a couple of weeks. What you do is you move the attention elsewhere to just having a couple of games like shuffleboard, virtual darts, crazy golf, all that stuff's in a pub, all that stuff's in the pub, and so you compete against each other, have a general laugh, don't get into politics or football, and then so you don't end up fighting about it.
And throw an axe at
throw an axe at the wall, all that stuff.
Right.
But I've just put out now. I've seen a couple of people, and I said this a while back, but a couple of the guys on LinkedIn who work for Boom Battle Bar, and in fact they're recruiting, but they are saying, who fancies joining the fastest growing leisure company in the UK? Now that is very important. They are the fastest growing leisure company. Now, if you are investing in small caps, you look for growth, and you look for growth where it can exceed most other companies. And that's what you want to do. And they are, creating, appreciating assets. And this is going to become a big company. Richard's very ambitious. This will be, I said, it's gone from a micro cap. This is my strategy. If it takes a while, it takes about 5-6 years to get on the path there. There's 3 years you can see really good progress. Then 5 years it starts to really motor. But this is going from micro cap to mid cap. And this company, I think, is going to do it. I said, nice rebound in XPF. Up over 35% from the recent low. That's where it's been. So people buy it. People selling at 22 pence. And now it's over 30 pence. So what are you doing? What are you selling at the low for? I've done it again. I've sold at the low. And I'm buying back into the high. I don't know why I'm doing this. It's your emotions. So I said, being described as the fastest growing leisure company in the UK. And that's what a lot of the guys on LinkedIn are saying. Full pipeline of 39 Boom Battle Bar sites, including a further 7 potential owner-operated sites, 11 potential franchisee sites, plus 40 escape rooms as owner-operated franchise internationally. Mate. And I did put a list of the ones that advanced legals or exchanged on contracts or open. And so far there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 Boom Battle Bars open. The next biggie, though, is going to be one. In fact, there was one in Edinburgh. There's one there. But there's also one, the big flagship. This is the biggie. 15,000 square feet on Oxford Street. That's huge. That is huge. And that is going to be a lot of money there because it's always busy. It's the busiest shopping street in Europe. And they've got a massive Boom Battle Bar on there. And in fact, Richard did say to me, he said, do you know what's interesting about that? He said, they are around the country, but fund managers and all the kind of people, they don't tend to travel that far, unless they go to their country house somewhere. But we can now drag them along, to a Boom Battle Bar and show them what it's all about. And they can experience it. They can see it's busy. They can see, people enjoying themselves. Very good environment. He said, honestly, interest will grow. But not only that, it's going to be a phenomenally commercially significant site because it's going to be always busy. Like I said, in London, people are going out every day of the week, aren't they? It's not like, in the local regional towns, it's weekend stuff.
And tourism is opening up again.
Yeah. So it's busy. It's busy 7 days a week, pretty much, and it'll be chucking out a big chunk of change, and it's owned. Yeah. It's not franchised; it's owned. So once that opens, that's in Q2. We're now in Q2. That's going to be big. But I genuinely then they have oddly. Someone said, "Look at the Hull one. There's one in Hull. That's 34,000 square feet."
Yeah.
And I said, but I said I think that's part of a flip out in a trampoline park. Which they all, and this was yesterday. And I said, oddly, my son right now, Monty, is at Flip Out. I said, always busy, pretty much there, but they have the option to acquire Flip Out as well, exclusively within 18 months after signal their interest in that. So this is going to be a big, fast-growing leisure company. It'll be one of these ones that, wow, we were in this early. Now
it's like, I tell you what, if they buy Flip Out, the share price could bounce.
yeah. But it doesn't come back down though, and because that's not.
Good point.
That wasn't a good analogy, really, because maybe bounce and then hold on to something.
Oh no!
So it come back down.
Oh yeah, hold on to like the ceiling.
Yeah.
Okay.
No, bounce, you go through.
Go through the roof.
You bounce. You go through the roof. There's something no damage there though, because they have to repair that.
They bounce so high, go to the moon. Yeah. Right.
But so listen, that's I'm really excited about.
But you're a big fan of XPF. I hadn't realised.
Yeah. Oh, you haven't realised that? No. I'm a big fan. Yes, it is my largest holding. Yes,
I'm happy for you.
Yeah. Anything else? Listen, equally excited on this is Trufin. I think it's going to be I think it's going to be a monster. I really do. Yeah. Lloyd's best in class has been described as their software to be described by a bank as best in class.
What's like 1/4 of the business, isn't it? So
1/4 of the business. Did you see that? Actually, there was a video of Harriet. What's her name? Harriet. Someone. I tweeted it out. Let me just find it. But she's called Harriet, and she is the CMO of PlayStack. And they were talking. This for craziness. Okay. Now, what's Trufin's market cap? Trufin is 77 million. Okay, 77. Bidstack is.
Not Bidstack.
No, Bidstack, is 37 million, right? So it's pretty much half of the thing, right? Okay. So they're half of that. But Bidstack are ad tech. They don't own any games. Yeah. They don't develop any games. All they've got is the ad tech that goes in it. So they split the revenue, of course, with the publisher and the platform, whatever. Now, PlayStack, on its own, 1/4 of Trufin, not only is a publishing platform, if you go on there, there's a thing that they pitch your game. So you can join them. They'll fund it for you. So they've got lots of games on there. They've got loads of games on there. One of them is Mortal Shell, which was a massive hit. Sold 500,000 units last night. Not only that, they are developing Engage, which is ad tech, to go in the games. So they've got the games, they've got the platform, they've got a hit game, and they've got ad tech to go in the games. And yet, that's valued 1/4 of the business. What's 1/4 of 70-something? What's that? That's valued below... 19. That's valued below Bidstack on its own. Yeah. Now, the broker, then we go to Satago, the broker has the value now at Satago at more than double the entire market cap of Trufin.
Yeah.
So already on those two companies, we've got two other companies that are profitable. Already, the valuation of Trufin should be way above this. And Satago's growth is phenomenal.
And even if you factor in that the broker's always over-egging it, bring it back a bit, it's still...
Well, let's say it's one time. Let's say one time...
Yeah, exactly.
One times, let's say it is the value of Trufin. We're not even looking at the other three companies Trufin's got.
Yeah.
But as I said, James on the podcast, he believes this can be a unicorn worth £1 billion. And he said, we are in advanced discussions, very advanced, with companies that are big and well-known. He said, put it this way, my mother, if I mentioned them to her, would have heard of them. And she's no fintech specialist. She's a mother, but she would have heard of them, their household names, and literally in advance. So that's on the valuation of Satago is way above Trufin's actual valuation, and yet they haven't. That's on Lloyd's deal alone, biggest retail bank in the UK. Golden sort of contract. Yes, very good. Biome's had a bit of a rally.
What percentage of your portfolio is Trufin these days? Approximately.
I think it's I know it's definitely above 10%. What I say, 20%. It's probably between. No, I wouldn't say it's at 20%. I'd say it's close to. It's close. Maybe close. Let me think. 10%. It's about 15%.
Yeah. I'm about that. Yeah.
Okay. Biome is bouncing. I don't understand the value of Biome is ridiculous. It's now enterprise value of one-time sales, and. Guys, they could do 40% growth next year. People are not believing this. And if you look at the statement that they said on the outlook, they said Q1 has gone strong. We are confident in the outlook of the figures for this year, which shows 43% growth. That means 9 million in revenue. That will then be half sales. Not even one-time sales, half sales. So that's nuts in a very hot area.
Absolutely.
Do you own any SpaceandPeople? Again, that's half sales. Pretty much.
A little bit, yeah.
Yeah, that's, and if you look on their social media channels, very busy now. Trains, Victoria Station, lots of things going on. Lots of companies doing brand. I saw that. What's that hedgehog? The blue hedgehog in the gaming hedgehog.
Sonic.
Sonic, yes. They did Victoria Station. He was at Victoria Station with a branded piece, and there's Lord of the Rings stuff there. So, I don't know what he's doing there. What he's promoting, obviously something to do with Sonic the Hedgehog, but also
I would think so.
Yeah, Lord of the Rings and it's set there with a big golden ring, and also so it's very busy now. Companies are starting to spend again, So on that, so I call that that's a recovery play. I think of course, footfall's going to get busier and busier. Have you anything else? Gfin now valued at on the value of one part of the business again. That's what's good about the sell-off. If you look at the valuations, they've all come down. They're all good. They're all compelling investment cases now. I mean, even if they do like 6 million this year in revenue, which is flat on last year, peers are at 5 times. That's 30 million. They're now valued at 16 million. So they're literally half the value of its peers. So and yet they got too fast growing. Very early, still very early, but all good, all going well. Have we not mentioned anything? Trufin?
No, I think we've covered everything, haven't we?
Yeah. Basically, all stocks I own are going to do very, very well.
Okay, that's good.
They're probably the best stocks you can own. They're actually they are the best stocks you can own. There's all levels of. In fact, they're all early stage, all high risk, small cap. But you've got one now profitable.
I was thinking this the other day because I was thinking I don't expect all of them to do well. It's just lovely if they did, but it doesn't need all of them to do well to be transformational. You just need a couple of them, 2 or 3 of them, and I've got a few more than you, I think, in my portfolio. But it doesn't need all of them, and some of them, hopefully none of them will die, or will dive. But even if some are very mediocre, as long as you've got 2 or 3 that are really stellar, that will be transformational.
Well, also, what you do want, I mean, Gfin is taking a big knock. Luckily, we were in early-ish anyway, so that knock is less severe. Again, but that's investing on valuations. Investing in Gfin, I thought they're even just one-time sales there. This is silly. That. And but even if those return you get back to breaking your return in nominal amount, say 5-10%. That's fine, and then you get 1 or 2 outperformers, something like Trufin or XP Factory. I mean, if you look at the risk on those, XP Factory now are generating positive cash. So the risk is reduced now. They don't have to go back to the market, all that stuff. The Trufin have enough cash now to get to profitability on the 2 parts of the business that weren't profitable. Gfin's got enough money to get to profitability, so they're not going to tap. They may, at a higher valuation, I believe, they may raise and acquire good sites that'll generate more value, you know. So if you invest, if they buy something for £1 million, they say over time it's going to generate 5-10 million worth of value. That's fine. That's fine, you know. But it won't be done now. It'll probably be done a couple of years down the line when they're profitable, and so they don't have to actually. And in fact, when you're profitable, you could actually go for, you know, bank debt if you wanted to. You wouldn't have to do. You wouldn't have to do equity, and you could do partnerships. And also, because you're generating cash, if you did do it via equity, you wouldn't have to issue so much. You could pay some of the cash stores and some of the equities. But if they, you know, if they do raise again to acquire genuinely good sites, have you seen the valuation? It's amazing. In fact, Jonathan Hall, who's the CMO, Chief Operating Officer, came on the podcast. The CFO, sorry, and Operating Officer, came on the podcast. Not John Clark, the other John. Never talked to him before. Very good guy, very knows about it. And he's saying, when you get websites like this, because we've got a mix of like advertising on the sites and affiliate revenue now, because Stock Informer and all that, it puts the cost per user up. It raises your level. It's not linear. We've had 3 now. February's a record-breaking month, 16 million, which is a short month. And this year's is normally very quiet. This bodes very well, he said, because we are hitting our records at quiet periods. And now he said 17 million in March. Viewers, when you've got that kind of scale, the more scale you have, the average cost per user is linear. It just jumps, especially if you've got a variation of how you sell to people. You know, if you're very targeted, like your Stock Informer, you've got geo, you're very targeted, you know, a good niche, a growing niche, and that cost per user sort of, you know, goes up vertical almost, or it goes up sharper value than the actual. So even if they're creeping along and adding $1 million per month in eyeballs, the average cost per user can start to shoot up a lot steeper. You know, and they've gone from 4 pence. Per average monthly user to 23 pence now. So that's going to be excellent. So I think that, you know, once we get to the end of this year, that average cost for you would be a lot higher, and also, you know, eyeballs on those things, probably way over 20 million per month. So that's going to be good. So they're going to get profitability. I see that. Once the churn is gone from the placing, there's 2 tranches of placing. So the one's happened half the amount, pretty much. Second amount will happen on the 4th, I think, this week. Once the churn is gone, people are selling all that stuff. Once that's, I think it'll pop. Sooner or later, a bit of good news, it'll pop back to maybe halfway to where it was before the drop. But yes. Anything else TV-wise? I watched a bit of We Crashed last night. You should watch that. If you've got Apple TV, We Crashed. It's about, you know, WeWork, how the guy was nuts, spending money like crazy. He's running out of money. They were losing like over £2 million a day, and he wanted to spend more and more. And they said, Adam, we can't do it. He said, they kept talking about revenue. He said, doesn't matter if you're generating 100 million in revenue, we are burning 300 million, 400 million in cash. The maths don't work. But he was like, literally, because he was such almost a very inspirational, good seller. People just believed in him. And to believe his story, his vision, didn't think about the financials. You know, there's a hedge fund there. Where's this money going? Invest into you, invest in him. He said, this is the guy who's in the front of all these magazines. They're all promoting him because he's a good talker. And they really fell for his story, you know. But you're not looking at the fundamentals. They're burning cash like crazy. But yes, but Adam will. Yes, but Adam will. No, but Adam. No, sod Adam. We are burning cash, you know. But they all believed in his vision. It's amazing, really. It's worth watching. It's really good because he is completely deluded with the clouds, the cuckoo land, you know. So have you seen anything on television worth watching?
No, I was looking for something to watch, really. I haven't really got anything I've been watching. I've just been flicking around a few things and randomly watching things. Nothing to recommend particularly. Have you got any recommendations apart from that? Any box sets or any long? No. Okay, that's good. Thanks.
We're watching that. We are watching. Yes, this is Steve's part of the thing, isn't it?
Yeah.
We are watching that morning show, which is very good.
That is good. Yeah, I've seen that.
Yeah, and when Megan goes to bed, I watch We Crashed, which is worth it.
Yeah.
But apart from that, hardcore porn. Highly recommended. Highly recommended.
Excellent. Right. Okay, that's good.
I'm joking. I just very soft, romantic stuff. You know, that's what I like.
And you watch it for the stories?
Yeah. No. I watch porn as well. Yeah. I like romantic films with people hold hands and stuff. That's what I like.
Oh, I see.
Really gets me going. When I see a couple genuinely in love, holding hands, walking along a river somewhere, you know, really gets me going. That, look at him, look how in love they are.
Casablanca or something like that.
Yes. Oof, I'm horny now.
Okay, and on that bombshell.
Okay, all right. Bye-bye, Peter.
Well, let's end on a high.
Yeah. Speaking next week.
Bye.
The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.